Hello and good morning everybody. Welcome to this week's Gold and Silver Club end of week review non-farm payroll special presented by myself, Phil Carr, and Nick Kalsi at the Gold and Silver Club. So today we'll be revealing the latest developments in the commodities markets and analysing the week's performance. So during this live session we will cover an end of week summary for gold, silver and commodity currencies. We will be looking at the top trades over the last week. We'll be covering live market commentary, technical analysis, and also looking at the week ahead. So key events looking forward, and of course answering any questions as well during this webinar. Okay, so this week has been quite a week of consolidation actually for the price of gold, and today, really, the key news announcement to look at, as I'm sure you all know, is going to be at 1:30 p.m. for the US non-farm payroll. So gold price, what has it done this week? Okay, it's traded really between the 1,575 to 1,580 range this week, so pretty tightly range bound on gold currently. So we're really waiting to break out of really this box, and I'll talk to you that on our live market commentary very shortly. So we're seemingly content, all the traders, to wait and see what the impending results of non-farm payroll is going to be today at 1:30. If you're in the UK, it's GMT, so that's today at 1:30. In the previous report for January, the US labour markets expanded again, and the number of non-farm payroll employments rose by 157k, and the US unemployment rate remained at 7.9%. But if the upcoming employment figures increase again, well above 120,000 in additional jobs, this may lower the chances of the Fed extending its monetary policy. So we all know what that means, and that could trigger bearish sentiment towards gold. So we shall see today. We've got some key levels to look out for on gold, on silver, on the currencies today, so we'll be looking at those very shortly. However, if the job data suits expectations, we would expect this to be on the bullish side for gold. So the big question today really is, how will US non-farm payroll impact the gold prices today? Okay, so just a little bit about myself and Nick Kalsi. I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialise in teaching people how to make money from trading the most lucrative markets in the world: gold, silver, oil and forex. I've trained thousands of individuals to become independent traders, successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders, and regular contributor to a number of financial publications, speak at numerous trading seminars, webinars and workshops. Joining me on the call to help answer all your questions is Nick Kalsi, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And it's through his first-hand relationship with some of the world's most successful traders he's discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. And he also regularly writes for a number of global business and financial publications and appears frequently on financial television. So here is ourselves actually recently. This is an interview that we did on Swiss financial television, just as talking about gold and silver, our predictions in the upcoming weeks. And here is just some recent press we've been in: Global Finance Review, International Life and the South African. So that's just a bit of background on myself and Nick, guys, who are in safe hands today. And let's quickly turn our eye and we're going to have a look at the gold price. So we're going to move on and start having a look at our top trades of the week and also some live market commentary with you all as well. So if you want to take a look at the gold price right now, we are still holding this area of consolidation. So potentially might have some fireworks this afternoon. So the current price of gold is at $1,577 per ounce. Okay, so very range bound this week, very tight range in that. We'll look at that very shortly on our charts. So, the top trades of the week using the Gold and Silver Club signature trading strategies. Let's go through our top trades this week. Very much focused on, there have been a lot of currency trades this week. So, the first one is Australian dollar CAD. This was actually, for those of you who were on last Friday's webinar, this is one of the trades that we were looking at this market on last Friday's webinar, so you may recall the levels that we were at last week. So we did actually come up to this level of resistance here, this price action level at 1.0525. The price came up, reversed. We had a nice price action set up there, and you can see the nice tight risk to reward, and the price actually came down to our profit target. So we had a 26-point risk on this trade, sold short. Each lot we traded $260 risk to make 92 pips on the trade. That was just a swing trade. You could have got out on a day trade for 50 pips on the Friday, but we let it run until the Monday, hit our profit target for 92 pips. So each lot traded was 920 USD of profit for a 3-to-1 risk to reward. And we've had quite a few trades. Australian US dollar's been really nice this week. It's had some really nice setups. So we actually came down, we tested that key price action level, was 1.0132. It's a key Fibonacci level actually as well. And you can see the price came down, gave us a good setup there. Price, you can especially see that if you go out to the daily time frame as well, and we had entry there at 1.0132, and we managed to get to our take profit for a swing trade at 1.0239. So that was a really nice trade, 161 pips. Our risk on the trade 24 pips, each lot 240 US dollars risk to make 161 pips on each trade, so $1,610 profit per lot traded. So that was a nice 6-to-1 for a swing trade in Australian USD. That was actually a potential sell short signal. Once we came up to that resistance, we actually got a really nice setup. Price couldn't really break above that level of resistance. That was about 1.0292. You can see that clearly marked on the chart, and started to form a doji there. The price opened and closed at the same level. And then the market reversed. You see a nice big bearish engulfing candle afterwards. So that was nice for a quick day trade there, and that was midweek actually. It was about Wednesday, I believe. So we had an entry at 1.0292. We came down back to our profit target here. You can see on the screen there, and then we started to the price just reversed there, so we got out. So that was for a 65 pip profit on that, for a 20 pip risk. So for a nice 3-to-1 risk to reward on Australian US dollar. USD Canadian dollar. We saw USD Canadian dollar spike up. We did see this sort of inverse hammer here, indicating a potential reversal. Price came down. It just got supported by this level of support, which also happens to be a key price action level as well. You can see where the price just bounced off that with real accuracy there. 1.0265. Nice tight risk to reward on that. I just traded it back up to resistance. So each lot we traded 22 pip risk, so $220 risk for 69 pips of profit, so $690 of profit for a 3-to-1 risk to reward on USD Canadian dollar. Just on a long entry there, just nice quick day trade. GBP New Zealand dollar has been moving very range bound. We covered this last week as well during the live trading session. So you can see there where we actually entered short. This level of resistance also happened to be a downward trending resistance level as well. And that was just getting in at 1.8324. You can see clear level of resistance here. Nice setup. Price came down, and it was just really for a day trade on this one. We were seeing if it would have given us more for a swing trade, but no, we found resistance at this level of support at 1.8142. So we had a profit there on the trade of 182 pips from a 36 pip risk on that. So each lot traded 360 US dollars risk to make 1,820 USD per lot for a nice 5-to-1 risk to reward on GBP New Zealand dollar. Okay, excellent. So really, in terms of the gold market, it's been very much consolidating this week. You really just want to wait with your trades. We've had some really nice price action trades, as you can see, on some of those commodity currencies. And it's a bit like crossing a road. If there's lots of traffic, there's lots going on, you don't really want to get chopped up when the market is just hardly moving, as it has with gold this week. You want to wait, but there's a clear signal to get into this market. There are some clear levels we're looking at, we're interested at, and those haven't been hit yet. So we'll have a look at those on the live market commentary now and see what we can expect from today's trading, and certainly some key levels as non-farm payroll is not far away. It's about 2 hours 20 minutes away. So we'll have a look. We'll turn our eye to the live trading. So as we have a look at this, guys, I'm going to quickly switch my screens. So any questions you've got, I will do my best to make sure. Let me just to bring those up on another screen so I can still see them. Okay. Excellent. Let me just switch my screens here so you can all see. Okay, you should be able to see my screen in just a few seconds. Okay, we're almost there, guys. That's almost loaded up. Just takes a few seconds for it to come up on the WebEx. Okay, fantastic. I think you can see my screen now. Yes, let's have a look. Make sure you can. Okay, fantastic. So for USD, so the first market we're going to take a look at the moment, we're going to actually look at the USD Canadian market. So USD CAD here. So this is exactly what we're talking about here, where we've actually seen within this market, we have seen a breakout to the up. Well, we've seen this market just really trend higher and higher recently. We did see this level here, 1.03341, is providing us with resistance on this market, and this was the sell short setup that we had just to. Well, you've had a sell short and a long opportunity, but you can see that that has been capped by this 1.02544 level on USD Canadian dollar. So USD Canadian dollar at the moment, what we are interested in right now is where the price is right now. Obviously, we were just sort of coming towards the upper end of this channel again. So if the price was to come down to this key level, this level of support that we've seen over the last week or so, we'd be looking for potentially to see if the market is going to bounce and get another leg higher on USD CAD, or whether we're going to get a break down in price. And if we do break down beyond that price, we're not seeing really too much resistance or support even until we come back down to this next Fibonacci level here. So that could be potential move that we see, or if this afternoon for non-farm payroll, if the US dollar does gain strength this afternoon, we could see this market even breaking out higher. If we look on the daily time frame there, we are above currently, still above key moving averages, but we are starting to see the USD Canadian dollar certainly slow down a little bit. It's had a really good run recently, as of, from about mid-February there. You can see we've had a lot of upside here, so we could see some profit taking at this level in USD CAD. So that's certainly one we're going to be watching very closely this afternoon, potential breakouts or sell short setups, depending on how non-farm payroll plays out today. Okay, we look at Australian US dollar. So Australian US dollar, okay, so you can see here we've had some nice trades in this market. This week we had quite a key level of support, which held. If you go back on the chart to your weekly time frame, you'll see this level of support holding just last year as well. I think it was May last year we had this level tested and got supported. Had a nice rally from this level of support back up to 1.02929. This level of resistance, and we're just channeling on this market. Obviously, a lot of markets at the moment waiting for that non-farm payroll data to come out. Okay, so essentially on Australian US dollar, we're going to be very interested to see if we're going to get this afternoon either a breakdown in price, but if we're going to be supported by these levels, or whether we're going to see the market come back down and test these lower key price action levels, these lower levels of support, or whether the market is going to break out to the upside on the data, especially if it's bearish for the US dollar. We could see gold, silver, Australian US dollar, New Zealand US dollar all get a lift, and USD Canadian dollar sell off. So if that happens, we could see a breakout to the upside on Australian US dollar. Right now, we're right in between that sort of range currently. We're just between these levels of support and resistance. So really, you want to be just watching this market closely to see what happens at non-farm payroll. Okay, we move across to the gold market, and the gold market, let me just put that in the correct time frame there for you. I mean, we're still bearish in terms of the overall sentiment on gold here, but what you will note is on gold, where we've just been within this box really on gold. So if we go and just draw a little box of where the price has been moving between over the since last Friday really, we're putting in a number of a very, well, you've got a doji there, you've got an inverse doji. Okay, we've just got a lot of low volatility on this market currently. So this is the box which has been forming on gold. So it's a bit like a spring which has been coiled up and it's ready to really burst out now. So we expect some potential high volatility move on non-farm payroll. So either that's going to be a breakdown in price, which will see us break out of this box and we'll come back down, and then we're going to be very interested, first of all, in the 1555 area, which provided support back in mid-February, where you can see where we bounced off that level just ever so slightly lower. Actually, let me just put that. Yeah, 1554.92 to be precise. If that level gets broken down, I think the next level is 1547. And then you're going to start getting into the territory where we were last year, where we found support between 1522 is the line in the sand. That's a very important level to be held on gold. But you may find areas of support around the 1533 to 1522 if we do get a real breakdown in price. Now, obviously, a lot of bigger players will be looking at these key price levels. You're going to have a lot of stops below this level. If that level is breached, we could see quite a big move downwards. But historically, especially last year, we didn't break the 1520 level. We could see a lot of volume going to the market at those levels, and we'll certainly be very interested if the price comes down to that on the correct setup in seeing whether we're going to get some really nice longer term positions. If the market was to do that, it may not do that. But if it was to go lower, that's what we would potentially be looking at. Of course, if the market does spike higher, you want to be ready for a breakout, really, above 1586. You see this Fibonacci level here, 1586, you can just draw that on your chart as a clear level of resistance. So the market is really finding it difficult this week to break through that level. So obviously if we do get a break through that level, again, you could just get a burst out to the upside, not really too much resistance. 1600 isn't really much of a resistance level, so you could see the price just come easily back to around 1616. There wouldn't be too much stopping the price getting to that level. Then you may see another wave. You may see quite a lot of profit taken around that level. Levels of resistance are going to be between 1616 to about 1625 to 1630 area. If we do really get a lot of momentum behind this trade, which could happen, I think it's unlikely, but if we do get a breakout of this 1526 to 1530, the next real key level to really get through is going to be around the 1550. Actually, you can see the 50-day MA just here is around the 1540s as well, which may cap the price. It did previously cap the price going back to January. You can see here just on the daily where the price was capped by this MA. So you just want to bear those key levels in mind. But gold is definitely, we're very interested to see how gold's going to move today. We've been in that tight consolidation range really all week on gold. So we are expecting either a breakout to the upside or a breakdown in price. And we'll be monitoring gold very closely during non-farm payroll today. Okay, so gold one to keep an eye on today. Let's just quickly look across to the euro. So the euro actually, we had quite a nice move on the euro yesterday, and we've broken back out from this this sort of downtrend. We had quite a nice spike in price. You can see here actually if we go on the daily time frame here, we point this out just yesterday actually. We've got, let me just show you that on shapes here. So you've got here, this is a bullish engulfing candle. Okay, so this candle here on Euro USD has engulfed 1, 2, 3, 4 previous candles before it on the daily time frame. It's quite a bullish sign there. We're breaking through also a Fibonacci level 1.30727, or just even you could draw that as a level of resistance. We're broken through that today. We could see the market, if it's bullish today for euro and bearish for USD, we could see this market come back up to test previous levels of support, which would be a 1.33163, and then we would be potentially interested to see whether we're going to get another leg lower on euro, or whether we can break out to the upside. But we're going to be looking at this level to see if there's going to be either sell short opportunities on this. That's what we're going to be sort of interested in at the moment. The overall market sentiment is still bearish on this. We're below some of our key moving averages on euro, but today, just based on the more intraday day trading, we have got a nice bullish engulfing candle on euro currently. Australian dollar, Japanese yen was looking very interesting last night. We've actually had a breakout overnight on Australian dollar, Japanese yen. We were moving very range bound for most of February on this market. Had some really nice short sells, long position short sells as this market moved very much range bound. Then we broke down in price about a week and a half ago, and since then we've really put on a spectacular rally with Australian Japanese yen, as the Japanese yen has weakened and Australian dollar has strengthened over the last week. So we're now breaking out. We've had a breakout just yesterday. Overnight we've had a breakout on this market. So potentially from our analysis at the Gold and Silver Club, we would be potentially looking to see if we're going to get some pullbacks back towards this resistance, and see if resistance now becomes support. So see if the price comes down on profit taken and retest these levels, and see if resistance now becomes support for the next leg higher. Go out to the daily time frame. We're very much on the bullish side at the moment for Australian dollar, Japanese yen. You can see that we're actually getting a cross on one of our MAs as well. So potentially going quite a lot higher on this market. So looking at pullbacks to get in for the price to go higher potentially. Okay, we will take a look, and let's go across to, just bear with me 1 second. I believe, yes, silver. We're going to have a look at silver. Silver has basically been fairly. Again, we were looking at this just on last Friday's trading room, and you can see here we're actually on silver. And let me just delete that. It's just showing a bearish flag on silver. You can see where we actually came down to this key trend line that we've this downtrend line that we've had on silver since really the end of September last year. You can see this downtrend that's been playing out on silver. We were just testing this level at 20. This is the level we drew on the last webinar last Friday, 27.92, and then we put in a nice hammer. It's actually a dragonfly doji because it's such a sharp tail to it. And we have seen the price come up. It's not moved hugely for silver. It's been about, since that price bounce, we've had about just less than a 100 pip move, but you wouldn't have really entered that trade until you got that confirmation, which would have been about above 28.50. So it's really consolidated and done the same this week as gold has. So just looking at silver at the moment, so silver is just really moving sideways. It does need to do some work as well to either break up or break to the upside at the moment. Let's just draw a little box on this market currently. Okay, so we can see on silver currently throughout the past week or so, the price has not really managed to break much above 29.15. We've been really range bound, so between about 28.40 there to 29.15, which is pretty tight for silver. Silver is normally pretty volatile, so obviously there's a lot of expectation for news on this market as well. So we'll be looking again at for a potential break up in price to the upside or break down on non-farm payroll. So you can see there is a Fibonacci level actually on 28.75, and also there's one at 28.30 or key level of support. And we're going to be watching to see if on non-farm payroll we're going to see the price spike down. And if we do get a spike down, we'll be watching that downward trend to see if we're going to break that, and see if there's any opportunities if the price is going to come back down within the sort of 26 to 27 range, which is potentially quite a we'll be looking for setups, potential long setups, because that area wasn't broken again in the last 18 months. $26 an ounce has not been broken on silver. If we do have a breakout to the upside, we'll be looking to see if this breakout is going to be capped. So we could see a breakout back up to 29.49, possibly up to this price action level 29.64. The overall sentiment again on silver, I mean, we are still quite bearish. We're below all the key moving averages. So you'd really rather be trading with the trend with silver, unless we come down to some real key levels of support. Potentially this market is still quite weak. Well, it is weak. Silver is still quite weak. So we're going to be watching that quite closely this afternoon to see what we get in terms of setups this afternoon. We're just going to turn our eye across to Australian dollar, Canadian dollar, worth having a look at. So Australian Canadian dollar is doing pretty much the same as USD Canadian dollar. If you go and have a look at this market, we're getting this price action level here, 1.0550. We're finding that is providing some support at the moment. We did have the price gave us this big inverted hammer earlier on during the week, which hasn't really been breached, but the market is just consolidating sideways. So we are interested to see whether now this level of resistance is now going to become support, whether we're going to see a breakout above 1.06081, or if we get a breakdown. If we break this area of support, we could come back within this range again, okay, and come back down to this area of support. There's not too much to stop it if we do break through these price action levels here for it to come back all the way back down to 1.04338. So we'll be watching this market closely today to see if we get a breakout to the upside or a breakdown in price. On Australian dollar CAD, and we're just going to see if there are any other markets worth just quickly having a look at currently. Just bear with me. Oh, okay. New Zealand dollar, Japanese yen. Yep. So New Zealand dollar, Japanese yen. Wow, look at that. What a move that's put on over the last couple of weeks. So New Zealand dollar, Japanese yen coming up to test this key area of resistance now. So you can see 79.31. So what is going to happen if it does get up there now? We've got obviously a lot of strong momentum here. Yeah, we're looking very much on the bullish side. All the key MAs are looking bullish, but we'll be interested to see if we're going to get a breakout at 79.1317, or if we're going to see some profit taking at this level. So we're coming right up towards that key level of resistance. So non-farm payroll again is going to be important today to see if we're going to get a move like the price come up and then all the way back down. See key level of support, or whether we're just going to see this follow through and break out to the upside. So that's again going to be one to watch today. New Zealand dollar, Japanese yen. Okay, so there's plenty to keep, lots to keep an eye on this afternoon for non-farm payroll. So certainly we're going to be watching very closely. So let's look at what other key news items we have in the week ahead. Okay, so other major news announcements to look out for in the week ahead. So we've obviously got US non-farm payroll today, which is going to be important. This measures the US employment change in the number of people employed. So job creation, that's a very important indicator of consumer spending, very important economic indicator in the US, as you all know. Higher than expected readings should be taken as bullish for the USD. So if more jobs are being created, while a lower than expected reading should be taken as bearish for the USD. So we'll be watching that very closely. It's the measure, we've also, so that's US non-farm payroll, okay. Today that's going to be quite a market mover. 1:30 today is the one to watch. Okay, and then going into next week, next Wednesday at 12:30 p.m. we have the US core retail sales, which is going to be at 12:30 p.m. GMT. So that again will affect the US dollar. That's the measure in the change in the total value of sales at the retail level in the US. So that excludes automobiles. It's an important indicator of consumer spending and also considered as a pace indicator for the US economy. So that again affects the US dollar. Okay, and then we have next Wednesday at 8 p.m. the New Zealand dollar interest rate decision. So that is at 8 p.m. GMT. So that will affect your New Zealand dollar, US dollar trades. The Reserve Bank of New Zealand decides where to set the rate. So traders watch this interest rate very keenly, as short-term interest rates are the primary factor in currency valuation. So very important for any currencies you're trading with the New Zealand dollar in. So New Zealand dollar, Japanese yen, New Zealand dollar, USD, and so on. So we'll be keeping a close eye on that next Wednesday at 8 p.m. Then we have Thursday, 14th at 12:30 a.m. We have the Australian dollar unemployment rate, and that's going to be important for all your Australian USD trades. That's the unemployment rate measure, the percentage of the total workforce that is unemployed and actively seeking employment during the previous month. So again, that will affect the Australian US dollar quite significantly. So that will be one to watch. 12:30 a.m. Next Friday, the 15th of March, 12:30 p.m. we have the US core PMI. So that will be an important mover again for the US dollar. That measures the change in the price of goods and services. So that's the CPI, measures price change from the perspective of the consumer. And that's a key way to measure changes in purchasing trends and inflation. And next Friday at 12:30 we will also have the New York Empire State Manufacturing Index. So again, that affects the US dollar. A level above 0.0 indicates improving conditions, and below that indicates worsening conditions. So the reading is compiled from a survey of about 200 manufacturers in New York State, and a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the USD, and that's of course important as well for the gold and silver price as well. Okay, fantastic. So, guys, as we come towards close of the webinar, great to see lots of you on today's call. If you've got any questions at all, or if you'd like more information, do get in contact with us. Just quickly answer your question, Ray. Ray, we do have a London office as well. The best way to get in contact with us or to request information on any of our gold, silver and forex trader coaching programs is go to www.thegoldandsilverclub.com/course form. You can of course contact us at our email office@thegoldandsilverclub.com or our UK office on 0207 193 0403 or our Asia Pacific office at 852 8191 0403. So very simply, to request more information, you can just go on our website, Learn to Trade, and you'll just find a form there to fill out to get additional information. And of course, as a lot of you do, make sure, if you haven't already, subscribe to our newsletter at thegoldandsilverclub.com. That's the free weekly newsletter for gold, silver and commodity currency news, live market analysis and prices. Okay, fantastic. Well, yeah, we've got lots to crack on today with the news today. So good luck to everybody with your trading today. Of course, if you've got any questions, do fire them over to us today. And have a great week's trading. We look forward to see you on the next webinar. We'll be back same time next Friday at 11 o'clock. Okay, fantastic. So for myself and Nick, and also thanks again to the team at FX Street for their fantastic work putting on all these webinars, and we'll see you all again next week, guys. Okay, so speak to you then. Okay, thanks guys, bye bye.